1.2 billion US dollars. That is how much money Celsius is missing, and it could mean customers don't get any of their funds back. I'm Joel Flynn. Welcome to the Daily Forkast, July the 15th, 2022. Celsius bankruptcy has shown a staggering hole in its balance sheet, but it might be even bigger. Opensea has cut a fifth of its workforce as the crypto winter bites its bottom line. Circle is trying to calm concerns about whether it's got enough reserves for its USDC stablecoin. And there's more shady revelations about Do Kwon and Terra. This is what's happening from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Celsius customers, it might be time to look away. The crypto lender is missing at least $1.2 billion. That is according to bankruptcy documents filed in the United States. Those listed its assets at $4.3 billion and its liabilities at $5.5. But the real hole could be much worse. Celsius has estimated the value of its CEL token at $600 million as of Friday morning Asia time. The total market cap of CEL is only $170 million. The company could continue to make money from things like its staked ETH, its outstanding loans, and its Bitcoin mining operations, but there are growing worries for Celsius customers. They haven't been able to withdraw their funds since June the 12th, and some reckon they could be left with nothing. That's because Celsius filed for Chapter 11 bankruptcy protection, which protects the company, not its customers, as well as because of the fine print of the company's terms of service. How bad are Opensea's finances? Well, the world's largest NFT platform has just laid off 20% of its workforce. CEO Devin Finzer blamed economic instability and the crypto winter for the layoffs. He said the company is preparing itself for a prolonged downturn. According to data from LinkedIn, around 150 people could be set to lose their jobs as a result of these cuts. They could also, though, buy Opensea another 5 years. Opensea, of course, joins the growing list of crypto giants laying staff off. Bybit, Coinbase, and Crypto.com are among the others. Circle is trying to calm worries about its USDC stablecoin. The company has released a detailed breakdown of the reserves that back the currency. It showed Circle has $42 billion of US Treasuries and $13.5 billion in cash as of the 30th of June. That means the reserves are worth more than the total value of USDC in circulation. That makes USDC the second largest stablecoin by market capitalization. The breakdown hasn't been audited, it hasn't been verified. Circle's chief financial officer has said the company is planning daily announcements, though, about these reserves going forwards. That could potentially include details of how much cash is being held by Circle custodians as well. Some have recently said they're concerned about Circle's terms of service and about Circle's potential exposure to the contagion hitting other crypto firms. Meanwhile, Ethereum's transition to proof of stake inches closer. The 9th shadow fork went live overnight Wednesday time in Asia. That is one of the final steps ahead of the merge. A shadow fork focuses on testing one or two smaller functions at a time. In this case, it was Ethereum's maximal extractable value boost feature. That is supposed to create more competition between network validators. According to Ethereum co-founder Vitalik Buterin, the transition will make it harder for validators to accept bribes for prioritizing transactions, which has of course been a problem. The third and final testnet merge is expected to take place in August. The full merge will follow on after that. Ethereum outperformed the rest of the top 100 cryptocurrencies overnight. It gained up to 10%. It was off that high as of Friday morning Asia time, though, trading around the $1,200 US mark. We've got more content for you on the merge, on Circle, on NFTs, on Celsius, on all of that. Like and subscribe to this video to get up to date on everything that's happening at Forecast for you. There is much more analysis as well on what all of it means at forecast.news. There is a link to that in the description below. Billions of dollars of cash flows went through a suspicious company owned by Terra. That is according to South Korean media. State broadcaster KBS claims lawyers have found a previously unknown subsidiary run by Terra boss Do Kwon. Forecast Danny Park has the latest.
It's now 2 months since South Korean authorities started their investigation into the Terra Luna collapse. The latest development is the discovery of Terraform Labs subsidiary Flexi Corporation, which was allegedly used to facilitate cash flow from overseas to Terra affiliates. The KBS report also stated that Terraform Labs CEO Do Kwon is listed as the only internal director of Flexi Corporation. It added that the subsidiary was a non-operated paper company, and after visiting the registered address, no physical presence was discovered at the building. Prosecutors have reportedly identified cash flows worth 6 billion Korean won, or about $4.5 million US, and 12 billion won, or $9 million US, coming from Terra's Singapore base and passed through its office in the British Virgin Islands before reaching Flexi in South Korea, as well as other Terra affiliates. KBS suggested the subsidiary was used as a channel to receive funds from liquidated cryptocurrencies, adding that a former Terraform Labs employee claimed Flexi caused issues in the special tax audit on the company last year. When asked by Forecast, a prosecutor at the Seoul Southern District Prosecutor's Office wasn't able to confirm or deny the allegations related to the ongoing probe. Forecast also reached out to Terraform Labs and Do Kwon for comments, but they haven't responded as yet. Meanwhile, local media reports dating back to February suggest Terraform Labs was not actively concealing the existence of Flexi. I'm Danny Park, Forecast.
And finally, play-to-earn games initially gained massive traction with their earning features, but amid the crypto winter, industry players say now is the time for those play-to-earn games to bring back the focus on having fun. Forecast Timmy Shen takes a look.
Martin Hoon of Singapore-based gaming guilds as a service platform Meta One is just one of those advocates.
If you look at the growth for Game 5 from last year till now, most of these Game 5 are still not really game. Their focus is on 5.
Hoon's comment reflects a growing trend in the blockchain gaming industry, with play-to-earn games like Axie Infinity fighting to retain players. The crypto winter, along with the Ronin hack back in March, saw players' potential earnings slump. Axie's Smooth Law Potion in-game currency stood at 35 US cents a year ago, but it's now worth less than half a cent. Hoon says blockchain infrastructure developers are introducing traditional gamers to the space as a result.
Moving forward, in fact, this bear situation is very, very useful for infrastructure developers like us for Game 5 because we are bringing new blood to the ecosystem.
Gabby Dizon of Yield Guild Games, which pioneered gaming guilds in the Philippines, says Axie Infinity has been working hard on building a new version of Origin. It's a long-awaited upgrade that's yet to involve crypto rewards across the board.
If you look at the last 2 months, Origin has kind of improved in its gameplay lately. It's a lot more fun now. They're making sure it's as fun as possible before they're adding the earnings because they want it to be a really long-term sustainable game.
Dizon believes the next big thing for the blockchain gaming industry will be integration with esports.
One of my personal theses is that play-to-earn and esports worlds are merging and will be the same in the next 5 years. Esports is very good at creating tournaments, promoting professional players, and helping games become more successful by introducing the kind of live sporting element.
Dizon says this aspect will help with the longevity of games. He also sees a lot of potential for development around Asia, with YGG currently in talks with partners over the possibility of launching in South Korea.
The Koreans have like the best gamers in the world, the best esports teams and athletes. So the Korean sub-DAO is very focused on esports.
YGG has also just launched in Japan, where it says it will help local companies with blockchain game development. Gen Kanai of Hong Kong-based blockchain venture capital firm Animoca Brands adds that Japan is an influential market.
It's a market where globally popular intellectual property, characters from manga, from anime, from games are developed.
Kanai says Japanese gamers are some of the most passionate in the world, and they pay a lot for certain games, so it's a very important and influential market to be in. I'm Timmy Shan, Forecast.
Alright, that is it for today's Daily Forecast. Do follow us on Twitter for more updates at forecast_news. I'm Joel Flynn. I'll see you next time.